Hi everyone, welcome back to the channel. I want to talk about natural gas again. The last time we spoke about this was a week ago, so let's have an update and see what's going on. Before we dive into the nitty-gritty of this chart, let me tell you a little bit about myself. I'm a professional trader with over 20 years of experience in the markets, and over the years I've learned quite a lot about what it takes to be successful in trading, and today I want to share that knowledge with you. So please make sure to like and subscribe to this video and to this channel so that you can make sure that you get the video updates as soon as they come out. Let's have a look at where the chart levels are and what the potential trading strategy that we could use is to help us profit from these current extreme moves. So let's have a look at the natural gas weekly chart, and holy smokes, we've dropped yet again. We're down at $2.23. I've drawn a couple of lines in here on the weekly chart so that you can see where we are in relation to prices. And these two lines, the first one at $2.23 and the other one at $2.05, go back quite a long way. This one at $2.23 goes back to December 2020, and that was a significant low on this move down here. And then it also goes back into around about August 2019, where it was also a consolidation zone. Just below $2.23 is $2.05, and that was a very significant support level in August 2019. And you can see actually that level has been a very important support level for quite a long time since then up until now. Let's have a look at how this market has moved. We've moved down from $10 all the way down to $2.23 in just really a number of weeks. It's quite incredible. This is about as oversold as I've ever seen natural gas on the charts, at least for the last 10 years or so. And what an incredible move. And it's really tempting to think that this market has to rebound from here pretty quickly. But with such momentum downwards and such a capitulation of prices, such a dramatic collapse, it's not likely that we're going to get a rebound. Now, normally if you get such a steep move and if you were going to get a solid and quick rebound, it would be very dramatic, and we could have moved back in a V-shaped bottom up to this $3.35 level. But it hasn't done so. We've actually just lingered around, and every time we try to make support, we've gone sideways in a flat line sort of basis, and we can see that better on the day chart. And you can see every time we've tried to form a support, there's been no reaction whatsoever. It's just gone sideways for quite a long time over there at $3.35. We came down to $2.50 region, just moving sideways, no reaction whatsoever, and now just a move lower. Not a lot, but in percentage terms, it's quite a lot, down to $2.23. That's where we're trading right now. It's Friday afternoon or evening on the 17th of February. So make a note of that in your diary to remember this day, because there'll be a lot of you and a lot of traders, and not only small traders, a lot of funds and speculators who will be long gas from quite a long way above us. There's a lot of pain in this market at the moment, I can only imagine, and futures contracts expire every month. Every month there'll be people taking significant losses on natural gas. And that also cleans out a lot of the weaker hands, leaving this market just to continue on floating lower. What do we do with all of this? Well, let's have a look at the 4-hour chart. I don't often go to 4-hour charts on commodities. I don't think it's really very valuable in the bigger, I prefer to trade off day charts and week charts. So I don't go down to 4-hour and 1 hour, and definitely not less than 1 hour charts. But having a look at the 4-hour chart, there's something quite interesting that we can observe. First of all, we've got a sort of a triple bottom attempt at around $2.35. You can see an attempt to make a bottom and a move up, but nothing dramatic. Another attempt a little bit later on, and then a move up, but again, nothing dramatic, and then a third attempt and nothing dramatic. So all of these bottoming processes have seen no dramatic reaction, no immediate and powerful reaction, which is what you want to see off a bottom to create a sort of a V bottom. Actually, if you look at the 4-hour chart, it looks unbelievable going back in time. It's just a one-way waterfall down to the bottom. This dollar level, 223, apart from being a significant support level, also takes us beneath that support that we were talking about at $2.40 or $2.35. And my target my downside, remember I said if we got to 250, we probably wouldn't hold it. We'd then have to probably go down to 230 and possibly even $2. Now, that support level at $2.05 should provide more of a serious reaction. And what we want to see is a real violent move up from the bottom. We want to see some massive, strong candles. We want to see a big percentage, 10, 15, maybe 20% move in a day to sort of rocket ship us up from the bottom here. We haven't seen any of that yet, and there's no evidence that that's going to happen. But these moves come out of the blue, so we could expect to see that at any time now, considering the huge downside move that we've seen and the clearing out of all sorts of positions along the way. I know people who were long natural gas at $6, at $5, at $4, $3, and a lot of them have either been cleaned out or are still clinging onto those positions and hoping for the price to move back towards their break-even point, whether it's $3, $4, $5, or $6. And that's where a lot of players will be exiting the market. So if we do get a strong reaction somewhere down at these lows, we're going to be moving up potentially quite violently up to $3, $4, or $5. But when we get there, we can expect an equally strong move back down, as some of those positions will be covered to cover the losses, essentially. So how do we trade this? Well, I'm not actually very worried about this move down, because I know that the lower we get, the more likely it is that we're going to find support somewhere. In the last video, and I'll put a link up to that video at the end of this one, remember I talked about getting through $2.50, probably down to $2.30. And I said if we get through $2.30, we'd probably get down to $2. And even $2 probably won't hold, because it's just too juicy a target. It's too well known, too obvious for the price to hold. And often we'll get in sort of a through, under, and then back over type of movement. So those are the two lines beneath us, that sort of tram line at where we are at the moment. $2 it's now moved down to $2.22, and then $2.05. And then below there, if I just clone this line, you can see the $2 level is just below there as well. And that's that low. Actually, that goes all the way down to 180, this line. And that's that spike low there. So those are the three levels: the current price, $2.05, and then 180. Now, if you're prepared to trade this long, which is probably not a bad bet, actually. I know it's a very strong move. I know there's a huge amount of downside momentum. I know that there are economic and political pressures on the price of gas. And I don't have time to go into all of that at the moment, in terms of supply and demand and all the ins and outs of what's going on in the oil market. Oil and gas, but we're talking about gas at the moment. All we can do for the purpose of this video, is look at these three technical levels: 223, or call it 220, 205, and then 180. One of these levels is probably likely to cause a reaction higher. We could get back up to $2.50, maybe $3, maybe $3.50. And if we get above $3.50, that's a significant resistance level. We should be able to see some more recovery up to $3.75 and maybe $4.50, somewhere up there. And at the very best that we can hope for, I suppose, on an absolutely dramatic turnaround, is somewhere up around $5 or $5.50. But I don't see that coming anytime soon, considering pressures on the price, the extraneous factors, the fundamental factors apart from the price chart, and the fact that we've got an enormous amount of position covering that's going to take place at some of these levels, particularly at this $3.35 to $3.50 in this region here, where it was a major support and a major resistance. If we get up there anytime soon and through there and hold above there, I'd be very surprised. So I think that's the best we can hope for. It's maybe worth taking along here, bearing in mind that you're going to have to allow for the price to go down below 180 and potentially even lower. I don't think so, but potentially. If it does that, you need to have your plan in place to minimize your risk and to make sure that you don't get cleaned out like everyone else who's been buying at $4, $5, $6. We don't want that to happen, and it's no time to be taking big, massive positions on natural gas, because we just don't know whether we can get down to 180 and maybe below. So that's my strategy. I'm actually long natural gas. I might have a wee attempt If we get down to $2, maybe at 180, I might have another go. And then I'll also look to add if we can see a significant reversal pattern taking place on at least the 4-hour chart, but preferably the day chart and even the weekly chart. And so on the day chart, we want to see at least a close above this level here and a hold, probably a move up through back test and a hold above $2.60 to 65. Let's call it $2.63. If we can get a move up through there, back test and a hold above it, then we could get up to 335. So that's my strategy. I'm not investing a huge amount in this, just a few contracts. So it's no time to be betting the house on natural gas unless that's your plan and that's what you want to do. But it should only be with money that you are prepared to lose. Well, if you enjoyed all of that and found that useful, I'll be updating again. So log in and stay tuned for the next update next week, and we'll see where we are. So subscribe to the channel, like the video, and press the notification bell to make sure that you get the next video on natural gas, the Widowmaker, when it comes out.